Hi everyone, welcome to my YouTube channel, and this is another video, and today I'm going to show you the powerful setups that we're going to use in our trading. Okay, so you're most welcome. And the first powerful setup that we can use to trade in the Forex market, it is what we call a turtle soup. Okay, a turtle soup. So this is one of the very nice setup that I'm going to show you. And one of the concept that is used here, it is what we call a stop hand. Okay, so I will show you, and I'm sure you're going to understand, and you can start using this setup. Okay, so let me put this slide very well. Let me put it very well right here. Okay, so one of the nice concept that we're going to use in this strategy is what we call a stop hand. So you're most welcome. If you're new here, consider subscribing. Okay. So let's see. Turtle saw. This is one of the setup that neutralizes liquidity. That means it always takes out the stop losses before it moves in the direction that we want to take our trade. So it is the first breakout that always starts before we enter into the trade. And that first breakout aiming at sweeping out liquidity. So we have turtle soap short, that is TSS, and we have turtle soap long, that is TSL. So the turtle soap short, this represents the short setup. This is where we always take sell trades. So we have some criteria. When we look at them, then we conclude taking that trade as a short trade. Okay, so this is always a first break above a zone whereby stops liquidity existing. So I'm going to show you in a chart very shortly. Turtle soap long TSL. This represents a long setup. It is a first break below a zone where sell stops liquidity exists. Okay, let me show you. Now, how do we trade this turtle soap? This turtle soap has a single formula. That is what we call we always say the price usually sweeps out about 5 to 20 pips, and sometimes more, above or below a point, depending if it is a short or long setup. This is where 5 to 10 pips or even more sometimes above or below a point where liquidity exists. After the price sweep the point, enter a trade against the movement used to sweep stops or liquidity with minimum of 10 pips stop loss in lower time frames like 15 minutes and below. Okay, so this is what we call the buy stop liquidity rate and buy stop liquidity rate in turtle soap long. Okay, let me show you here. So you can see, for example, if you have this kind of setup, let's take an example. The highest, this high where I have put an what we call an X. Okay, BSL. It has been broken. That high structure has been broken, and you can see the price is going up. And what it was doing there, it was moving to take out buy stop liquidity. Okay, and after taking that buy stop liquidity, you can see it went about 5 to 10 pips. And I have told you our stop loss is from that point, the highest point of our liquidity sweep. Then we have to add other 10 pips to put your stop loss. Of course, it is not a normal setup. This is one of the setup that you have to be very careful when you take it. Okay. So this is how we take. So you can see here we used what we call the stop hunting because the price went up. It's a forced breakout to take out liquidity, and you can see 5 to 10 pips were swept out, and our stop loss was above about 10 pips from that range of 5 to 20. You can see it in the little market. We had the high of the day, that is buy stop liquidity. You can see it was taken out. After being taken out, at the end of the day, what happened? The market went up about 10 pips. Then we could add another 10 pips above so that we can put our stop loss there. Then the market went down after the first breakout, after the liquidity sweep, after the stop hunting. So this is easiest setup you can use. But you can also use it in this direction where we're talking about turtle soap long. In here you can see we had our sell side liquidity or sell stop liquidity. You can see here the low was broken. Okay, then the price moved down with the first breakout to take out those liquidity. Then you can see the market went up. The same concept, 5 to 10 pips sweep. Okay, then we have 10 pips at the range of stop loss. You can see that in the chart on the chart, we had the low of the day there, SSL. Then you can see it came down, took about 9 pips. Then we could add other 10 pips to put our stop losses. So you have to know this is somehow aggressive entry. Okay, so if you're not an aggressive trader, that means this setup might not be a nice one for you. So we have been talking about this turtle soap. Let's go to another setup that is accumulation of. I will show you the demonstrations about all these setups. We have stop hunt, break of market structure, and return to order block. This is the second setup after turtle soap. Okay, so where market makers or banks have taken liquidity stop hunt, they have pressed the positions in these areas, and generally the price must not exceed this level. So of course, when the stop hunting has taken place, we believe that. Okay, let me show you. How do we trade now? This is a setup where we have stop hunt plus break of market structure plus return to order block. What occurs first is stop hunt. Okay, that movement is used by the market makers to neutralize liquidity, to take out liquidity. Okay, then the second, there is the break in market structure, which confirms the stop hunting. Okay, if there is no BMS, that means it was not a clear stop hunting. It was just a break of structure, normal break of structure, continuation move. Third, the price return to order block. That is where we confirm our entry. For example, here you can see. So you can see the market was moving downward. Then you can see that low was broken. That is what we call a stop hunting. Then the market went up, and what it did, it broke above the BMS level. And that is what confirmed the RTO. So we had to wait for the price to return to the order block that has been drawn to take our buy trade. This is very simple. Stop loss, you put it below the order block. Take profit, you find it above there. So in bullish stop hunt, BMS and RTO, you can see the market was moving upward here. Okay, then you can see it came above it was moving downward. Then it made what we call BMS. First of all, it started with stop hunting. You can see here. Then we had to draw our order block. Then the market went up, broke that BMS level, confirmed that we have to take our entry at the order block below. Bearish stop hunt, BMS and RTO. You can see the market here was moving, was going upward. Then you could see that high was broken so that stop hunting could take place. That means they had to take some stop losses above. And what happened? The market came down and it broke that BMS level. And we had to wait for the RTO, the return to the order block there above to take our sell trade. Very easy. Likewise, here you can see we had our stop hunting above, the price went up, then it came down, and what it did here, it created BMS. Some people call it change of character also, the same. Then we could wait for the price to return to the order block. This is very, very simple. So we have another setup here that is SMS shift of market structure, BMS, and RTO. So this is the third point. First, the price fails to break a top or a bottoms, and second, there is a break in market structure, confirming the shift of market structure. Third, the price return without a block. Let me show you here with some simple setup. This is the third setup, remember. So you can see we had our lower lows here, lower lows, lower highs. You can see then at the end, we could see the market started creating lower highs, okay, for the first time. And you can see it was confirmed by creating higher highs two above after the break of BMS. That is where we had to wait for the RTO. So we wait first for SMS, then we wait for the BMS to happen, then we enter at the RTO at that zone. This is easy. So bullish, let's talk about bullish. SMS, shift of market structure, you can see, creating higher highs, then it broke BMS, it was creating higher lows, then you can see it broke the high BMS and started creating higher highs. We could wait just for RTO to enter in these trades. You see, look at here, the market was moving upward, then you could see shift of market structure, whereby if we were creating higher highs, you can see there we were creating higher lows. And if you're creating, lower lows, lower highs, okay? And if we have lower highs, that means it is a sign of reversal, shift of market structure. We have to wait for the BMS to be broken, that level to be broken. Then we can wait for the price to return back. Easy. You can see here also, we have shift of market structure. Then the BMS was broken there. The market went down and then it went back to return to the order block to take our trades. So I will show you the last setup that I have taught you. That is AMD, accumulation, manipulation, distribution. I told you accumulation is where the market is ranging. Manipulation is where the liquidity, these guys are trapping some traders. Distribution will go against the manipulation movement. Okay, so this is the simple setup you can see. We had accumulation, then you can see manipulation. The market went in a wrong direction. Then we could wait for this for the order block to be formed. Then we took it in. We went in and took this trade to the bullish direction. So this is the end, and I hope you have understood these concepts. So I have shown you 4 power setups. You can just go and leave them and repeat, and I hope you're going to understand very well. If you have not subscribed, consider subscribing. I wish you a good day. Make sure you start from the first video. Make sure you start from the first video so that you can understand, because I have these videos are in episodes, okay? So if you start from the first one, that means you're going to have a complete strategy. This is very, very free. So make sure you do it, okay? But also you can just click the link in description to join